My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you money. My job, not just to entertain, but to educate, to teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Sure, you can't always get what you want, but you know what? Sometimes you get what you need. Sometimes things are getting really good in our economy, even as we don't seem to realize it. And that's how you get it daily today, where the Dow vaulted 408 points, S&P gained 0.9%, and the Nasdaq advanced 0.61%. Yet we're so busy being negative, including that surprise plummet we had Friday to finish a really sorry week, that we just can't see the positives that are around us, which is why rallies like this one take Wall Street by surprise. So maybe it's time tonight for a little refresher course on what we actually want to see from the economy, because the pervasive negativity just does not jive with the facts. Yes, we have what we want for stocks to go higher. We have what we need, but people seem to not realize it. So first, if you are a bull, there is an historic, unassailable goal for higher stock prices. We want growth with little inflation. That's the ideal kind of economy for the stock market to thrive. And guess what? Well, we're there. Let's think of what happened Friday. First, we got this terrific employment report. We created 187,000 jobs, which is decent, but it's not explosive. We didn't want explosive because unemployment's already at 3.5%. Now, we have become so conditioned to believe that low unemployment's bad news for the market that we actually went down on Friday off of an ideal set of numbers. That's just crazy town, people, crazy town. This is exactly the kind of Goldilocks number we've been waiting for. More modest job growth with much less inflation. That's what causes a market to go higher. Nirvana. Now, we want an economy that can grow without having endemic inflation. That's increasingly what we have. So how the heck is that a reason to sell? I think today's action shows that people are rethinking last week's pretty dire negativity, because they're beginning to recognize that just because unemployment is below, say, 4%, that doesn't mean it's a terrible time to invest, for heaven's sake. Historically, it's a terrific time to invest. If you've been around like me, you know this is it. This is the kind of buying opportunity that we get at least at the end of Friday, when the market literally was in free fall. You know I don't like to pay up for things, but Friday, it was a thing of beauty. I was like picking my tomatoes. I wanted to be doing some buying. Second, typically we want to sell stocks if interest rates are going up. That's just a given, okay? But this time is actually different. See, we have a gigantic number of investors who bought bonds at really bad prices. They were way too high, and they're going to have to lose money. For ages, I've been saying that longer-term interest rates are just way too low versus the economy because we weren't going to have a recession. You know I've been saying that. That would justify the low rates if we were going to. I've also railed against the soft landing, hard landing dichotomy. The Fed's engineering an economy that's not landing at all. Jay Powell wants the economy to cruise at a good altitude with lots of job opportunities, but without the turbulence of runaway wage inflation. And that is where we head. The Fed has engineered an economy that's starting to glide, not crash or land. Yes, the trajectory is going the Fed's way. So we have to forget that hackneyed concept of hard versus soft. The people who own long bonds, people who own 20-year paper, they are losing their shirts. But you know what? They should be losing their shirts. Oh, they come on TV and they tell you how the market's wrong. No, they're wrong. See, they were betting that the Fed and Jay Powell would screw up, that the economy would crash. Well, it's not going to crash. The bet against the Fed happened. They placed it. They lost. Now they have to pay the price. The only problem is they tend to get a lot of airtime, and they love to complain despite having very little credibility. They always complain that the market's wrong. The market's not wrong, okay? The stock market was right today. Third, why do we never look around the world and see how other countries are doing? America's in great shape by comparison. Today, we learned, for example, that German industrial production was down 1.5% year over year, even as German wages keep going higher. Well, that's an unholy combination. That's not one of these, okay? Hey, Britain's got rampant wage inflation with a nearly stagnant economy. That's not this. Japan has inflation under control, but they have no growth. That's not this. China well, who the hell knows what they got? But it's declining growth and bad inflation as far as I'm concerned. Meanwhile, here in the U.S., we have an accelerating manufacturing growth after years of declines. China's trying to become more of a service economy because there's such a slowdown in manufacturing, but they can't do it. It's an aging country with bad banks galore and a dictatorship with a command economy. It's not obeying the commands. Fourth, we know the Federal Reserve has kept rates very high. I get that. We want that because we have a lot of stimulus coming our way. So we need our central bank to make sure the economy doesn't overheat again. I mean, it can slow down. We don't want it to start up again. The higher rates will keep inflation in check as all that infrastructure spending kicks in. More growth, low inflation. We want the Fed to keep doing its job, and it's doing it. Why can't anyone admit it? Fifth, we're beginning to see cracks in some of the areas that I've really been worried about. Cracks in housing. Rents have already peaked. That was according to Zillow. They know more than we do. That's huge. But we just realized, so rents are going down. You kidding me? I've been waiting for them to go down for 3 years. Home prices have stopped going higher. I read all the home builder reports. You can't expect them to plummet overnight, though. There's still a big from 2019. But what do you expect? You mean double-digit declines in housing? No, because we're not building enough homes. But we somehow don't acknowledge that housing's peaked. Same deal with cars. There are sales galore on both new and used vehicles. We refuse to acknowledge that, too. But what do we really want? Lower car prices, lower home prices, lower rents? Unless you're building homes or apartments or cars, you should be incredibly happy here. It's what the Fed wants. It's what you should want. It's what the commentators should want. But they're on the wrong side of the trade. They'll never tell you that. 6, 5 months ago, we worried the banking system was going to collapse, or at least many of the regional banks would go under, right? We heard thousands of banks could fail. Only a couple truly failed since that initial cluster of failures, although a few others came close. But so what? Close is it's like not horseshoes here. There's a big difference between a handful and thousands. But we never hear from the people who stoked the pin. Hey, remember all those guys who said Schwab was going to go under? Where are they? Where are those people? What were they thinking? You know what I think? I think that they... Sell. That's what I think about them. That's them. That's them. That's really them. Okay, sometimes people have to admit that they're wrong. I admit that I'm wrong all the time. I mean, I got J&J. J was up 3 today. I sold the J&J because I was worried about the lawsuits. That was wrong. I mean, I feel to be right, but I admit that I'm wrong. I admit that I'm wrong all the time, all right? These people never admit they're wrong. What kind of self-esteem? They have no self-esteem? Is that the deal? I'm confused about them. See, it's truly incredible that no one gets called out. The smaller regionals are good buys still, all right? I'm trying to be so nice here. I had a great weekend. I saw the Eagles. Everything's great. But I just deal with all these people. I'm not calling them liars. I'm just saying they don't have the confidence to come on and say they got it wrong. They just don't have the ability to say they're wrong because they're afraid someone's going to take the money away. I don't care. 7th, I'm sick of hearing about companies that are going to use artificial intelligence to get better at what they do. It's not happening yet, but by this time next year, we're going to start seeing humans replaced with AI. That will create surplus labor, something that would be terrible if we had moderate to high levels of unemployment. But we got 3.5% unemployment. Nobody ever wants to pitch new technology as a job killer. But we have a labor shortage in this country, so computers replacing people might be exactly what we need. Digitization means saving money, but it also means we got more people to do other jobs. I can go into so many other positives for stocks. I just think the overarching issue here is that we're getting exactly what Wall Street always wanted, growth with declining inflation. And that happened after a terrible week last week. When the rate cuts finally start, which I don't expect to happen or even want until next year, I don't want them. We're going to go from having an inverted yield curve to a normal yield curve. So all the people who sold stocks because of that inverted yield curve, whom I urge you not to listen to, will suddenly be eager to buy stocks hand over fist. And you can be a seller then up here. Of course, you can buy stocks when the market's standing irrationally. That's what happened last Friday. That's what happened all last week. I'm sure it's going to happen again. But right now, there's a tremendous bias against saying anything good, despite the fact that things are good. We just had a very good earnings season. We did, where revenue was fine. Earnings were great. What's more can you know? Well, I don't know what more you can ask for. I don't know. Yet, there's always some survey that shows how terrible things are, or that nothing good is happening at all, or that the Senate will not hold, or that Apple's awful. Here's the bottom line. Good earnings, good economy, good setup. Time to understand that when the market comes down like it did on Friday, not today, because it went and moved up big, on Friday, we have to recognize that the economy is better than anyone imagined a few months ago. So look for things to buy on weakness and then pull the darn trigger. Don't worry if you missed today. There's enough negativity around that I promise you will get your chance to buy at better prices. I want to go to Wayne in Georgia. Wayne.
Booyah, Jim.
Booyah, Wayne. What's happening?
What's the future of regulated electrical utilities, and specifically Southern Company?
Southern's okay. Someone asked me about that when I was at the Eagles on Friday. I mean, here's the problem. Like Southern, okay, yields 4.1. We have a company called Enbridge that's on later, ENB. That yields 7%, and it's got the same kind of cash flows. I say you cashier Southern and you buy Enbridge. But wait, you can hear him later. You can hear him. Make up your own mind. Let's go to Chris in California. Chris.
Hi, Mr. Cramer.
Chris, what's happening?
Not much. Thank you very much for taking my call.
Of course.
I'm a happy investment club member, and I appreciate all the work that you and your team do.
Jimmy Chill says thank you, and also Jeff Marks, too. What's up?
Yep, Jeff does a fantastic job. So my question is on a stock that it seemingly operates more like a mutual fund, and I'm curious what your thoughts are on BlackRock. And
okay, here's my thought on BlackRock. What the heck is that doing at 712 and not 812? That is one hell of a stock, and Larry Fink is terrific, and I just don't get it. I've been going back and forth with Jeff about putting it in the bullpen because I think it's so good. Now, we would have to get rid of one or other financials, but boy, that company has great technology, too. My hat is off to Larry Fink. Look at that board of directors. They're like the best board of directors in America. That accent. I hate that accent. I can't get rid of the accent. By this point, if I can't get rid of it, I can't get rid of it. Lori, there it is again. Lori in Massachusetts. Lori.
Hi, Jim.
Lori, how you doing?
How are you today?
I am good.
Nice
how are you?
To speak with you.
Same.
Again. So my question today is on Moderna.
Yeah.
I bought Moderna during the pandemic when there was 3 vaccines to choose from, and I chose Moderna, apparently. I chose one of the right ones at the time.
Yeah.
I bought it at 69.
All right. Well, look, I'm a big believer in Stefan Bancel. I know he hasn't delivered what we want. It's got a bad COVID hangover feel. It's got to get that same thing as like Zoom or like the Walgreens or the CVS. It's better than that. Stefan, come back on and tell us about all the great things you're doing. Would that be so hard? Give Stefan a ring. Okay, I'm telling the people who really matter here. And I'm sorry about the accent. I honestly. But boy, I was in Philadelphia. Everybody sounded just like me. It was so cool. All right, anyway, despite what you might be hearing out there, we do have a good setup for stocks. I had all those different things. I hope you took a snapshot of it. So if there's some weakness in the market ahead, that's what I want you to pull trigger. I don't like you to buy on up days. But last week was really one hell of a week that was so awful. What a good opportunity. On My Money Tonight, Campbell's Soup announced it would acquire Sovos Brands. That's the company behind the famous Rao's sauce. I love Rao's, but I can't get a table there, admittedly, but I had some really good friends get me tables over the years. And I'm learning more about that acquisition, what it means for the snacking kingpin with the CEO. I got the interview. Then Xylem recently completed its $7.5 billion acquisition of Evoqua in a pursuit to become a water powerhouse, but nobody seems to care. I'm not yawning. I'm getting the latest from the company's top brass. And is this economy robust enough for a stock like Enbridge to survive with a 7% yield? I'm digging this story with the CEO, and I know I like it on paper already, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.